Hello, everyone. Welcome to this week's Phillip Research Team morning call. So last week we actually just held our US market strategies topic. So today mainly there will be a short recap of what we covered, as well as some stock counter updates. We have Oracle, Sunhawk, and 17 Life, as well as our usual technical analysis. So do note that Paul is not in today, so there will not be any SG Weekly. And also Glenn is also on leave. So I think Iban will be taking over um, uh, Glenn's presentation. So just a disclaimer as usual. So everything we share is fully for educational purposes. So do seek your financial advisor if you want to make any investment. So without further ado, I'll pass the time to Igben to start off.
Thanks, Helena. Yep. So, kicking the day off with our US strategy and stock pick summary. So, this portion is Glenn's. So I'll be covering him because he's on leave. Yeah. So first of all, talking about the auto segment, pick up before the end of EV tax credit. Um, this is because uh the US government has stopped the EV tax credit in September. So the credit is given to consumers to claim. So they can claim up to 7,500 credit when they purchase an EV in the US. So over here in this chart, you can see Tesla's market share in the US and China. So the orange color line shows the Tesla's market share in US, and it has picked up slightly in the most recent quarter from 44% to 46%. As for the green color line, it shows Tesla's market share in China. It has been consistently dropping. So if you see in terms of overall trend, both US and China market has been dropping. And this slight pickup in the most recent quarter, we think is mainly because US consumers has been rushing to buy the EV before the US tax credit ends in September. Yeah, so next slide, please. Yeah, so our outlook for 20, Glenn's outlook for 2025 for Tesla is that recently CEO Elon Musk has bought back about $1 billion worth of Tesla shares, and this will slightly boost investors' confidence in Tesla stock itself. And uh, Glenn's view for the third quarter uh, uh, deliveries for Tesla is that it will it will it will be supported by this rush in consumer sentiments to buy Tesla EVs. However, for the fourth quarter itself, Glenn expects a fall off in terms of deliveries. This is because after the end of the EV tax credit itself, uh, Glenn expects Teslas to continue losing market share. However, if Tesla is able to at least maintain market share or even increase market share, then it is a very good sign for Tesla, because even without the EV tax credit, they are able to maintain the market share. So we do have to keep a close lookout for this. And Tesla also recently launched a cheaper Model Y, which is about 10% cheaper than their original model, to combat the EV tax credit removal. This is because a lot of US consumers are more price sensitive, and there's a lot of price war going on in the EV space from China competitors. So consumers are more quality conscious as well as price conscious, and so Tesla has to continue fighting on the cost front as well. And this is also the reason why Tesla has been losing market share in US and China, as mentioned previously. For Glenn's call on Tesla, he has a sell rating and a target price 220. Yeah, next slide, please. Okay, I'll be talking about semicon, still room for growth. I'll explain more later. Yeah, next slide. Yeah, so this is a chart of equipment makers' revenue growth compared to TSMC's CapEx trend. So we do think that equipment makers' revenue growth could decelerate in the next 2 quarters. So in this chart itself, the red color line shows equipment makers' revenue growth. So equipment maker comprise of ASML, Applied Material, and Lam Research. As for the blue color line, sorry, it refers to TSMC's capex. So because TSMC is a very big customer for equipment makers, so there's a very close correlation between their capex as well as the equipment makers' revenue. So TSMC for the next 2 quarters, they didn't increase their capex guidance. So this reflects a slight slowdown in terms of capex growth. For the next 2 quarters, we see about a 33% increase year on year. Even though it is still significant, but relatively there will be a slowdown in terms of capex growth. So for equipment makers revenue wise, we also do see a slight slowdown in terms of revenue growth. So for fourth quarter itself, we see about a 14% increase year on year in revenue. So relatively, this is a slight slowdown. And the reason why TSMC has been cutting back in terms of capex guidance is because ASML mentioned that during their conversation with TSMC, they are more cautious in today's uncertain environment, so their orders will not be linear. They are adopting a more wait and see approach to see how they can when they should pump in capex to increase the kind of production for high-end semiconductor chip. However, overall, we do see a very strong demand for high-end semiconductor chip. I'll explain more later. But for equipment makers revenue growth, even though there is a slight deceleration, we do still see growth for their revenue in the next 2 quarters. Yeah, next slide, please. Yeah, so now going on to the actual chip designers itself, NVIDIA and AMD. This is the snapshot of their data center revenue. So for the blue color line, it represents AMD's data center revenue, represented by the right axis. For the red color line, it shows NVIDIA's data center revenue, represented by the axis on the left. So as you can see over here, AMD has been keeping a very close product cadence compared to NVIDIA. So for example, when NVIDIA released their Hopper chip in third quarter 2023, AMD also released the MI300 chip 2 quarters later. And this MI300 chip is competitive in terms of inference performance and even outperforms the Hopper chip in terms of memory performance. This has helped them experience this kind of data center revenue ramp going forward for the next 2 quarters. And for the most recent Blackwell chip released by NVIDIA in the first quarter of this year, following that, AMD has also released their MI355 chip in June itself. So the revenue hasn't contributed to second quarter revenue. And we do think that this is expected to ramp in the second half of this year itself. And MI355 chip in terms of performance is also competitive to Blackwell chip in terms of inference. And in terms of memory, it even outperforms the Blackwell GB200 chip by about 1.6 times in memory performance. So we do expect this MI355 chip to ramp in the second half of 2025 itself. In this chart itself, we see a slight dip in terms of NVIDIA and AMD's most recent quarter data center revenue. This is because of the impact from China, because the US government has imposed the restrictions in their GPU exports to China. That's why they have taken a hit. Yeah, next slide, please. Yeah, so talking about AMD, recently they have a very big announcement with OpenAI. So this is a snapshot of the entire developments with OpenAI with respective companies. So if you just take a look at the red color words itself, so the GW represents gigawatts of data center deployment. And just for context, 1 gigawatt can power about 1 million homes simultaneously. And if you think about it, that's about the size of Singapore's power usage. Yeah, so just to put into context the scale of the data center deployment. So if you look at Oracle itself, OpenAI has an agreement with Oracle to pump in $300 billion worth of investments. And in turn, Oracle will help OpenAI build up the data center worth 4.5 gigawatt over the next few years. So this is part of the Stargate project. As for NVIDIA itself, NVIDIA has agreed with OpenAI to put in $100 billion worth of investments. And in turn, OpenAI will buy about 10 gigawatts worth of chips from NVIDIA. So there is about $350 billion worth of sales. As for AMD itself, AMD has agreed with OpenAI to deploy about 6 gigawatts worth of chips. And in turn, OpenAI will contribute about $130 billion worth of sales. So we do think that this is a very positive tailwind for like a bit like a stamp of endorsement for AMD's chips itself. Because for the next year, second half itself, OpenAI will deploy 1 gigawatt worth of NVIDIA chips as well as 1 gigawatt worth of AMD's chips itself. So even though NVIDIA currently has 90% market share in GPU itself, and AMD only has the remaining 10%, OpenAI is willing to deploy an equal amount of NVIDIA and AMD's chips next year, second half. So we do think that this shows that OpenAI views AMD's chips to be competitive to NVIDIA's GPU chips. And for AMD wise, the 6 gigawatt worth of deployment represents an annual revenue of about 26 billion US dollars for the next 5 years. So this is an increase of 75% of FY 2025 revenue. For AMD itself, our call is accumulate. We raised our target price to 255. Previously, it was 190. Yeah, next slide, please. Yeah, so talking about NVIDIA, um, we are still positive on NVIDIA because there's still strong demand from hyperscalers. So talking about Google, Amazon, and Microsoft and Meta's CapEx. So the dark blue color bars itself represent the total CapEx. So as you can see for this year and next year itself, we do still see an increase. For example, Google and Meta, they increased their full year guidance by 13% as well as 10% respectively. For 2026, we do see an increase of about 14%. So this 14%, even though there is a slight slowdown year on year, as represented by the red color year on year percentage line. However, we do still see an increase in CapEx. So this represents revenue growth for NVIDIA itself, because we estimate about 50 to 60% of this CapEx to be spent on GPU chips. Yeah, so this CapEx is being spent to meet the strong cloud demand, as well as spending for chips, servers, networking, as well as the power. For NVIDIA, our core is accumulate, and we have a target price of 185. Yeah, I think that's all from my end. I'll hand over the time to Fahmi. Thanks.
Hey, thanks, Ivan. Hi, everyone. So I'm presenting on the software and the cloud. So the theme for the sector is that the cloud demand outpaces infrastructure capacity and still doing that. Next slide, please. Thank you. So the software sector revenue accelerated to 16% from 16% a year ago in the same quarter last year. The table shows the sector gains were led by Microsoft revenue growth, which contributed about 11 percentage points to the sector's overall performance. So this also offset slower growth in the customer relationship management companies. For the productivity categories is led by Microsoft, which account for 70% of the software sector growth. So it's very safe to say that performance of the software sector is very dependent on the Microsoft performance because they are quite large. Microsoft reported 18% year-over-year revenue growth, and led by its cloud services business, Azure, that accelerated year-over-year, surpassing the prior guidance. The growth was driven by the increasing need of renting of supercomputer offerings. Next is the CRM segment. We believe the CRM is the laggard of the industry, as Salesforce grew slower at 10% year-over-year compared to the others. And for the ERP category highlight is Oracle. Its biggest winner is the cloud infrastructure, or IaaS business for short, that delivered the strongest growth, rising 55% year-over-year, which is well above the 45% year-over-year growth a year ago in the same quarter. The company expects the RPO, remaining performance obligation backlog, to exceed $500 billion in the coming months, and expect its cloud infrastructure revenue to grow 69% year-over-year to $18 billion for the next year. Next slide, please. Next is the Microsoft. We see the Microsoft Cloud Services business, Azure, is outgrowing the legacy business. So Azure revenue continues to accelerate in the recent quarter, well above the company's guidance. The chart shows the intelligent cloud. The Microsoft Cloud business segment, which is colored in orange, has grown steadily. It's becoming a more important revenue driver compared to the other business segment. It was 29% of total revenue back in 2018, but has grown to 38% in 2025. The pattern is more and more consumer and enterprise shifting to cloud-based products and services to reduce infrastructure costs and to scale accelerate business process. Large companies are upscaling their cloud and artificial intelligence product subscription. For example, some were purchasing more seats for their employees when the higher than the initial seats purchase than they did a year ago. For the outlook, the company guided a higher capex for 2026, but growing at a moderate pace. This is to address the significant contracted backlog, especially the cloud and AI demand. We maintain accumulate recommendation at $550. We still see upside potential given the high backlog and optimistic guidance from Microsoft, despite facing a supply constraint. And to add, a common theme for the software sector is that we are seeing on the software industry is the cloud computing and AI space. Most companies are dealing with a limited capacity to provide for the demand in AI services, whether for consumers or business keep growing faster than the infrastructure can support. This has led to some unexpected partnerships and deals for the computing power and hardware. What's been most surprising is how strong and steady these demands remain. We find two key observations. First, the demand for AI services across both consumers and enterprises remains strong, and meeting the demand continues to be a challenge. And second, several companies also report that the internal use of AI is already driving meaningful productivity gains. I think that's all for me. I will pass over to the next presenter. Thank you.
Thank you, Fahmi. So I'll continue with e-commerce sector. So e-commerce, we think right now is still the calm before the storm. So let's first take a look at how the US consumers are spending right now. So this chart kind of tracks the year-on-year growth in US retail sales since 2020. So you can see that sharp pandemic spike was in 2021. So that is when the stimulus and lockdown demand actually drove a boom. Then afterwards, it was followed by a pretty long, steady slowdown. So since early 2023, the growth has been really flat at about 2 to 3%. So to put that into perspective, that's barely keeping up with inflation. So in other words, people are not really spending more, they're just paying more for the same amount of goods. So what's really behind this softness? First is because there's higher borrowing costs. Credit card rate remains nearly 20%. So that is kind of limiting the spending. The second is the savings buffer that people save up during the COVID period have roughly dried up, especially among the lower income households. And finally, they have resumed the student loan repayment in the end of 2024. So that's taking another bite out of the disposable income. So even though if we take a look at the job data, it looks pretty healthy, the sentiment overall is pretty weak because consumers are getting more cautious and the restraint is now showing up in the retail sales numbers. So everything is calm right now, but we think the calm may not last very long because with all the trade war and the tariff weighing in, we've actually been expecting the impact since the last quarter, but it hasn't really shown up yet. Many of the firm, we think the reason is many of the firm, they're still running on pre-tariff inventories or they're trying to absorb the cost in the short run. And most of the e-commerce, they're also claiming that they have not yet seen a clear trend of spending demand actually decreasing. But we're going to be continuing keeping a close watch on numbers, but we do expect a margin pressure, price hike, and softer demand in the future. Moving on to Amazon. So we are seeing an interesting divergence between its retail and AWS businesses. So if you take a look at the chart, Amazon's retail operating margin, which is in dark blue, it has recovered sharply from negative territory in 2022 to around 4 to 5% today. So this improvement has been driven by their efficiency gains, particularly in logistics and cost discipline, because Amazon has been prioritizing to optimize its regional fulfillment network for the past few years. So it actually surprised us because with all the trade war and the tariff coming in, we expected the retail margin to contract, but surprisingly for the latest quarter, it actually expanded. So this is because Amazon said they have not yet seen the contract in spending coming in yet, and because of their increasing efficiency, overall it actually expanded. But we do expect some normalization later this year. But even with that, we think Amazon should still remain a relatively outperformer versus other e-commerce players, thanks to its scale, its logistic integration, and its very strong Prime ecosystem. On the other hand, their AWS margin, which has been growing steadily over the past few quarters, is shown in the orange line. It has actually contracted for the first time this quarter. This is primarily due to heavy capex investment in cloud infrastructure and AI capability build-out. So when they first announced that, actually the share price actually went down quite a bit because people were scared that AWS stopped making money. But we don't really see this as a red flag because it's actually a very healthy sign of continued reinvestment to capture long-term demand. And like Ipan mentioned just now, investment growth rate actually decreased, but it's still growing from already very big base. So overall, it's very heavy investment. So it's a strong sign that Amazon is seeing loads of future demand coming in. And right now, AWS continue to grow at double-digit rates, and spec load is also expanding very solidly. So overall, we think Amazon is transiting into a more efficient and future-ready platform. So we're overall optimistic on both segments. We think they're going to have resilience in retail even with the tariff shocks, and we expect long-term structural growth in their AWS. So overall, we have a buy recommendation for Amazon. Now let's move to hardware, especially smartphones. So what they're seeing here is the global smartphone market. It has entered a slower growth phase. It has a strong rebound in 2023, and then shipment have started to flatten through 2024 and into mid-2025. So you can see from the chart, the year-on-year shipment growth shown by the orange line, it has moderated to low single digit. So we take a look at this slowdown. We think it isn't necessarily a bad sign because it kind of reflects a mature market rather than a collapsing one. Because most consumers right now, they're holding onto their devices longer. The replacement cycle has stretched to around 3 to 3.5 years globally. And at the same time, the average selling price of the phone is still rising, which means brands are relying more on premiumization and feature innovation. So the big differentiator right now is really the AI integration. So they're increasingly pitching AI as the reason to upgrade, whether it's on-device generative AI, personal assistant like Samsung's Galaxy AI, or image editing tools like Huawei, or even Apple's Apple Intelligence, even though it's coming in a little bit later than we expected. So everything is showing that AI is redefining what the smartphone can do. So we're seeing a very clear shift from previously when people want to upgrade to a phone or change to another brand, it's because usually the hardware is impressive. They have like stronger specs. But now it's more about experience-driven upgrade because usually the brand or the new model has a stronger AI function. So that is why people are shifting. Moving on to Apple. So Apple just released their iPhone 17 lineup. And the lineup, the entry price was kept the same compared to the iPhone 16 lineup, but the storage was actually double the storage. They've eliminated the original 128 GB. Now the smallest storage they have is 256 GB. And so the initial demand for iPhone 17 was actually better than expected. In fact, we don't have the exact number, but Apple has been asking their suppliers to increase production of the iPhone 17 by 30 to 40% in order to meet up with the strong demand. So the reason we think is because they did have quite a few good features update, and now it's better value because the price is kept the same and the storage is even higher. So people saw it's like a good deal. But the iPhone Air wasn't, which is the feature that they want to highlight during the rollout, appears to be lagging behind a little bit. We think it's because they're trying to price it as a premium tiered model, but it actually has lower specs like single lens camera and smaller battery. So people think it's not really a good deal to purchase. But overall, even with the good demand and with the multiple good features that they have, we continue to see pretty limited evidence of a strong upgrade cycle because there's basically nothing AI in their rollout. So their killer feature, which is the Smart Siri, it's only gonna come in 2026. It got postponed. So I think right now we're still very cautious. We're not seeing a strong reason for the upgrade cycle. And the pricing, because they kept it the same, which is a good thing for the consumers, but it also kind of reflects that because they're already facing higher costs due to the tariff-related pressures, and also they're shifting a lot of their production to other countries or back to the US. So that's going to increase their production costs. And the fact that they kept the price the same means they're going to be absorbing all the extra costs. So that's going to weigh further on their margins. So overall, we maintain a pretty cautious outlook. So we have a reduced rating with a target price of $200 US. So that's all from me. I'll pass my time to Serena.
Thank you, Helena. Good morning, everyone. I will be presenting digital advertising segment. and in which I title AI Spend Meet Monetization Power. So after spending quite heavily on AI development, moving forward, we will be closely follow whether the digital ad company are able to monetize it through their product offering. So overall, we currently see the industry landscape remain positive. So marketing agency actually says that the global advertising spending growth is expected to be moderated in 2025 because of economic uncertainty, but they think that the growth rate remain quite resilient, with the global ad sales anticipated to grow more than 6% in 2026. This is because of the major events return such as FIFA World Cup and also US midterm election. They also do anticipate a very strong ad spending, especially on digital advertising. So as you can see in the slide, one of the key metrics that we'll be focusing on will be average revenue per user, because it directly measures how effectively the platform actually monetizes the user base. If you look at the chart, Meta consistently has the highest ARPU. It's rising from around $6.5 in 2018 to $14 in the second quarter. This is showing that a strong monetization per user, because with a platform like Facebook and also Instagram, users spend a lot of time engage with the very diverse content, which helps with generate very rich behavioral data, so that with the Meta AI recommendation model, advertiser can target very specifically to the audience they want, so they are more willing to pay for it. And then as for Reddit, the starting ARPU actually reported around $1.4. It has grown quite rapidly to $4.5 in the same quarter. This is a triple in under 5 years. We believe that it's because of the improvement of native ads and also premium features, and also the unique community targeting actually allows rapid ARPU growth, even the user base is much smaller than Meta. As for Snapchat, the ARPU actually fluctuate between $1.6 to $3.5. This is reflecting a quite moderate growth over time. As for Pinterest, it currently lags with the lowest ARPU. It's ranging between $0.7 to $2. It's showing very slow but steady growth, but overall we see Meta actually lead monetization power, while Reddit actually shows the fast improvement. Next slide, please. Thanks. So for Meta, as for the second quarter, the company still reported a very strong revenue at 22% year-on-year. This is because of the strong demand in online commerce vertical, and also the continued improvement in ad performance and so also user engagement. So Facebook and Instagram users are now spending more time using the apps, which actually helps with the overall growth in ad impression, especially in the APAC region. We think that Meta strategy to optimize the ad inventory, especially in the video surface, actually helps to boost the impression as well, which gives Meta more leverage to increase the per user monetization. And also the AI power recommendation model actually helps to drive a better ad conversion rate, especially on Facebook and Instagram, because they have more user behavior signal, and also they have a better historical context. So they can see that the average price per ad actually grew 9% year-on-year in the second quarter, because there's still a very strong advertiser demand because of the better ad performance. The company also mentions that around 2 million advertisers, which is around like 20% of Meta advertisers globally, are now adopting the Gen AI power video generation tools, which we believe that could encourage more ad spending from small to medium-sized advertisers with very limited resources. At the same time, Meta also started to roll out ads in Threads, which the company, they mentioned that they'll be focusing on scaling instead of monetizing right now, so that we currently estimated a revenue growth of 26% in the next quarter because of more pipeline to boost the ad business. It's not just Thread, and also including a WhatsApp as well, and also anticipate operating margin expand to 55% because of the better Gen AI capabilities to boost the user engagement, also ad efficiency. So for Meta, we actually have an accumulated rating with a target price of $830. Next. slide, please. Yeah, thanks. Next, for Alphabet, digital advertising business continued to be the core business segment for the company. We started to see a more revenue contribution from Google Cloud business, which is around 14% right now. Google Cloud business is currently growing around 32% year-on-year, and it remains Google's fastest growing segment. So most recently, you can see that they do have a very high profile deal, including $10 billion contract with Meta and also OpenAI. So moving forward, we are quite positive with Google Cloud business because currently there is a backlog of $106 billion and also still see a very high demand for enterprises. So this will help to push forward the expansion of CGP client base, which is growing around 28% quarter-over-quarter basis. But at the same time, we'll be also focusing on the capacity timeline because at first, Alphabet actually mentions that they're expecting to improve it by the end of this year, but now it's being pushed to 2026. But regardless, we believe that the revenue growth will show once the capacity became online. So this is why for financial year 25, we still expect a cloud business revenue growth of 35%. Next slide, please. Thanks. As for Alphabet's search business, we continue to see the dominance in traditional search, which is around like 90% of the market share. We agree that the competition currently now lies on the Gen AI search landscape, in which OpenAI's ChatGPT is actually leading the market share around 60% versus Gemini's 13.5%. So based on the recent disclosure by OpenAI, they are currently having 800 million active users. This is actually double since they provide the number in February, but we remain quite positive for Alphabet ad business because we believe there's still some resilience in Gemini and also traditional search engine because of the resilient performance. So Gemini actually launched in 2023 and currently now has a 450 million monthly active user. And Alphabet also see the daily requests actually grow 50% from the first quarter. We think that it can suggest a very surge in user engagement. At the same time, they also mentioned that the Gemini monthly process token actually has more than doubled since May. So it actually indicates a better capability in handling a more complex query, and also the user asking more longer and also complex queries as well. So, and then at the same time, AI overview in search now has more than 2 billion monthly user, and it's driving, even though with such a big user base, is still driving over 10% more queries globally. We think that it actually reflects a very strong user interest in AI enhanced search experience. So overall, we believe Alphabet advertising business will continue to be strong because the first is because of the sticky user behavior supported by a very massive user base, and the second is because we will continue to see a very high user engagement, and then with that, it will provide a better quality data so that Alphabet can actually enhance the ad targeting capabilities. And we also think that over the long-term basis, both services could actually, it is possible that it could be integrated for a more efficient ecosystem. So this is why we, for Alphabet, we actually have an accumulate rating with a target price of $265. And that's all from me. I'll pass the time to Fahmi for Oracle initiation. Thanks very much.
All right, thank you, Serena. So we are initiating Oracle, a company that I think many here are familiar with. So it offers mainly cloud database and infrastructure services and operates in globally, America, Europe, Middle East, and Asia Pacific. So Oracle has 4 business divisions. That is cloud, software, hardware, and services. Cloud and software are the biggest segment, make up more than 80% of the business revenue. It's licensed their software to enterprises and hardware and services to supplement their cloud and software product. But performance-wise, software, hardware, and services revenue declines slightly year-over-year due to the Oracle less focus on the less strategic business. On the other hand, the cloud business is doing well. It's growing at teens digit year-over-year, and in particular, its Oracle Cloud infrastructure grew at about 55% year annually. So the focus of the investment is on the Oracle's cloud infrastructure business. Also to add that industry-wise, the global infrastructure as a service IaaS market grew 22% in 2024 to $171 billion, driven by rising demand for AI infrastructure and accelerated cloud migrations. So as of second quarter 2025, Oracle Cloud remained relatively small, accounting for just 10% of the total $276 billion in cloud revenue generated by US hyperscalers. However, it has steadily gained market share, rising to 9.4%, 50 pips higher than the 2 years ago. In addition, Oracle Cloud revenue grew 26% year-over-year, outpacing the other overall hyperscalers market growth of 20% year-over-year. And the hyperscalers is referred to Azure, AWS, and Google Cloud. Next slide, please. We like Oracle because of the 3 reasons. First is its cloud infrastructure business, end-to-end provider for AI database and GPU infrastructure, and lastly, the high backlog waiting for faster monetizations. First, Oracle Cloud Infrastructure, or OCI for short, is niche compared to the other hyperscalers, namely AWS, Azure, and Google Cloud. It offers flexible usage-based model and diverse deployments compared to the other hyperscalers. It's tailored for regulated industry. It offers strong compliance and data residency controls, including sovereign regions. Oracle also partner with the major hyperscalers and enabling Oracle to install its hardware and database directly into their data centers. These reasons have drove 55% year-over-year cloud infrastructure revenue growth, with the OCI consumption up over 50% year-over-year. Second reason is that Oracle is an end-to-end AI database and GPU infrastructure provider. Oracle is a full-stack AI database and GPU infrastructure provider, and enable them to tightly integrating AI into enterprise workflow by running models close to the data. It partners with the firms like OpenAI, xAI, Meta, NVIDIA, and AMD to build GPU-powered data centers, enabling faster, cost-effective AI training and OCI. Oracle is also targeting the growing AI inference market with its AI database, which supports vector search and real-time automation. With full-stack control integration with top large language models providers like ChatGPT, Gemini, Grok, and Llama, Oracle offers scalable enterprise AI solutions. On the other hand, it also plays a key role in the $500 billion target project with OpenAI, building 4.5 gigawatts of AI data center capacity, and is well positioned for long-term recurring revenue through future leasing contracts. Lastly, we see more revenue and profit from quicker conversion of the $455 billion RPO backlog, and this backlog is 8 times more than the last year revenue. Oracle's RPO surged 359% in the first quarter of 2026, driven by major deals and demand. This includes multi-billion deals, that is major multi-cloud partnerships, AI training and AI inference, and projects target. Cloud infrastructure is set to grow 69% year-over-year to 18 billion in financial year of 2026, gradually increasing to 144 billion in financial year of 2030. This implies a CAGR growth of 68% over the 4 years. We see that Oracle can accelerate profit by scaling capacity, converting backlog, and leveraging on the multi-cloud partnerships. Next slide, please. This slide shows the Oracle infrastructure performance. The revenue shown in the blue bar chart has grown steadily quarterly and is maintained at above 50% growth year-over-year, driven by the high consumption. We believe the factors mentioned earlier, that is, Oracle support the regulated industry and region and multi-cloud partnership to continue driving the OCI revenue. Next slide, please. This slide shows the performance of the Oracle's backlog. The backlog, shown in the blue color, has grown steadily over the quarters, surged 359% year-over-year in the latest quarter, which is on the right side, the first quarter of 2026. We assume this coming from multi-billion-dollar deals, including the mix of multi-cloud partnerships, AI trainings, and AI inference, as well as projects target. The revenue, on the other hand, shown in the red color, also trading upward, but at a slower pace, meaning limited supply capacity to the surging backlog. We see potential for Oracle to accelerate revenue and profit growth by closing the RPO backlog and the RPO gap, by increasing the capacity and converting the larger RPO backlog. The capex ramp up from $21 billion last year to $35 billion in the financial year of 2026, combined with the strategic multi-cloud partnerships, is expected to alleviate supply bottlenecks. Next slide, please. We initiate coverage with $350 target price, and this imply a PE of 80 based on the 5-year DCF models that factors in high capex in the first 2 years and Oracle's long-term guidance of 5 years. While this PE is above the hyperscaler average of 41, it is well supported, we think, by the strong ROE of 85%, and which is above the hyperscaler average ROE of 44%. We see significant opportunities for Oracles from expanding cloud infrastructure, a robust long-term contract pipeline, and rising RPO. Oracle's elevated valuation is supported by a massive RPO backlog, with management potentially guiding for possible high RPO growth this year. And also to add, there is Oracle AI World in Las Vegas this week from 13 to 16 October, and we will further provide updates on this on the strategic and major announcement by Oracles. I think that is all from me. I will pass over to Darren for the next presentation. Thank you.
Yeah, thanks, Fahmi. Yeah, I'll talk about the Soon Hock Enterprise IPO that is upcoming. So, yeah, Soon Hock app is a leading, or rather a top 5 industrial developer in Singapore's strata industrial sale market. So currently it has about a 6% market share. So its market cap is about 180 million, the planned market cap for this, and the offer price is at 58 cents. So they're offering about 2.8 million shares to Singaporean retail, or rather the Singapore public offer. So that is about 1.6 million Singapore dollars. And for the shareholders, the cornerstone investors will hold about 19.8%, and about 6.9% of the total shares are up for offer, and the remaining 18 million plus shares are private placement to institutions. Yeah, so if you look at the top right-hand corner, this is a track record for Soon Hock. Basically, the most recent one was Polaris at Woodlands, so that is fully sold already. Yeah, and it's completed in 2023. Yeah, so the planned use of the proceeds for this IPO for Soon Hock is to acquire new land sites and building for development and redevelopment, and also finance the cost of developing 20 Shaw Road. So that is upcoming, as well as the other existing property development projects that are in the pipeline. So currently they have 4 projects in the pipeline. So the one that's closest to TOP is Starlight Tampines. So expected partial TOP in 4th quarter. Currently pre-sold 168 units, and there's issued options to purchase another 43. So total about almost 67 or close to 70% sold already out of 311 units. So that is they're expecting it by TOP, which is next year, to sell about 80 or 90%. And after that, the projects that like Tampines, they have Sky at Tuas. So that is expected partial TOP December 2026. So there is a pipeline for the development projects. But other than that, they do have some recurring income also from Jalan Papan. So that is a 300-bed workers' dormitory. So they get some stable and recurring income from that, as well as the Kaki Bukit units that they have. Yep, and currently their NAV is at 38 cents. So the offer price at 58 cents is about 50% premium to the NAV. And they have indicated that over the next 2 years, or from now, or rather from IPO until 2026, they'll pay at least 25% of net profit after tax as dividends. Yeah, so our take, or rather our view on this is that the financials definitely will be very lumpy because it's a developer after all. But if you are kind of a risk adverse investor, yeah, we do not recommend you subscribe to this IPO. Yeah. Next slide, please. Yeah, so this is just a brief overview. Yeah, so the upcoming projects, like I mentioned, Stellite, Tampines, and Sky Tower. So that's the top left-hand corner. The top right-hand corner is their income-producing industrial properties, which includes the 300-bed workers' dormitory. And they have another two that are in the planning stage, 20 Shore Road and Sengkang Crescent. Yeah, so if you look at the financial highlights, the 2023, there was a huge lump in revenue, 264 million. The other 2 years, 2022 and 2024, was less than 10 million. Yeah, so that's because from the completion of the Polaris at Woodlands that I mentioned earlier. So yeah, you do expect the financials to be very lumpy going forward. And yeah, I mentioned that if you are a risk-averse investor, do not invest this because there is some risk involved with this. So some of the risks include it's very dependent on the Singapore property market and demand and supply dynamics of industrial properties. So let's say in the situation where if things change and macroeconomic factors like tariffs or whatnot come in, then the demand for industrial space is weak. Then if they do not sell or manage to fully sell out their properties, like Stellite Tampines and Sky Tower, then definitely there will be some impact there to the financials. And they are also relatively reliant on external contractors because they don't really build themselves. So they engage external contractors that help them build, and all these contractors are selected through a bidding or tender process. So like price, quality, track record, all these are of these contractors are factor as well they need to consider. And yeah, so that's all I have for the outlook soon, or rather for this IPO. Yeah, sorry, could you go back to the previous slide, please? Yeah, so I have the dates over there. So if you're interested, regardless of this IPO, the closing date is tomorrow to subscribe for IPO, and the shares will start commencing on 16 October. Yeah, okay, thanks. That's all from me. I hand over the time now to Mel.
Meow. I think Meow maybe is facing some network issue. Maybe while we wait for Meow, maybe then you can start first.
Hi,
Oh,
sorry, can you
that's here.
hear me?
Okay. Yeah, we can hear you.
Yeah, sorry. We have a set visit with 17 Live. Yeah, next slide, please.
Meow, can you hear us? Oh, I think Meow has some network issue. Dane, do you want to start first?
Yeah, sure. I can start the technicals
Yeah,
first.
so
Yeah, next slide, please. Okay, so first up, I'll talk about S&P 500. So last week, we had a sell-off on the Friday. So with that, we had a breakdown of this upward support line, which is this blue trend line that you see in the chart that has been holding as support since start of June this year, as well as in terms of moving average, there was a breakdown of the 30 SMA level as well, which is the yellow line that has been holding as a dynamic support since June as well. So I think it's quite notable for this breakdown. And for the week itself, S&P 500 was down 2.4% as well. So with that, I think with this current pullback, if price continues to remain below the trend line support, which is around 6,670 level, despite currently we are seeing the futures doing a bit of bounce after what Trump said yesterday night, we could possibly still see some weakness towards a possible retest of the 6,480 level, which is closer to the day SMA with the green MA you see in the chart. As well as this will represent a retest of a previous horizontal resistance breakout level between August and September this year. So all in all, we see resistance at 6,610 to about 6,700 area currently. And for support, we see it at 6,340 to 6,480 area, which will be the range that we saw in second half of August to start of September this year. And the lower end of that range will also coincide with the close to the 100 SMA level as well. Next slide, please. This table just summarizes the technical calls we initiated for last week. So first one, buy call for Skylink, currently is in progress as of Friday's close is up 4.5%. And for the buy stop call for Circle Internet, it was triggered on Friday, but due to the market sell-off, also hit our stop loss and it's down 11% for this call. Then for the buy stop for Gemini Space Station, it has not been triggered as it had the price did not hit above the buy stop entry price of $26.50. So that's all from me for the technicals. I'll hand over time back to Gamal for 17 Live. Thanks.
Yeah, sorry. My line wasn't good just now. Yeah, so we had a set visit with 17 Live. So we visited their Tokyo headquarters from 29 September to 1st October. And we met up with the senior management team, also gain a first-hand experience in one of the signature offline event with the same first of the Northern Star. Yeah, so here are some photos of their headquarters in Tokyo. Yeah, so the one on the left is 17 Live's patent and also some awards they obtained. Yeah, on the right is their meeting room. Yeah, next slide, please. Yeah, so following TikTok's their recent press war and also subsequent reduction in revenue sharing to prioritize live commerce. 17 Live, their payout ratio is not competitive, which is maintained at the industry average, industry standard. And also after they shifting their contract to non-exclusive, so a lot of the streamers are actually coming back to their platform. And they also successfully built a very distinctive offline, online, the integration strategy. And also organizing signature events. They do have it pretty much every single quarter. Yeah, so to monetize using the offline event. So a typical ROI for the offline event is around 200% and can be as high as to 500%. Yeah, so here are some photos for one of the offline event. Yeah, so the one on the left is their VIP customer, the table for their VIP customer. So ideally it's on top 50 spender. And the poster on the right is some of the streamers selected for the finale. And the right top corner is when they were streaming. Yeah, so basically they were streaming to us for the donation, and the top one will be selected for the next round. Yeah, and then there will be a winner at the end of the event. Yeah, so the winner actually earned a 15,000 US dollar within 5 minutes. Yeah, which demonstrate very strong capability for 17 Live to monetize on their streamers. Yeah, and they also target a 1 million partnership revenue in FY26 through collaboration with different brands such as KFC. Yeah, so streamers will stream for months-long event, and the winner will get to be featured in one of KFC's TV commercial. Yeah, next slide, please. And other growth is expected to come from their live commerce segment, with Taiwan being the pivot point. since like they do have like pretty good infrastructure and also consumer engagement. So 17Live will train their streamers and adopt a revenue sharing model. And yeah, so basically the revenue sharing with the merchant and also the manufacturer. And typical commission is between 15% to 25% on gross merchandise value, depends on the margin of the product. And we do expect like a revenue contribution to start from day one. Yeah, so and the next one will come from like their short drama business, and they target to launch in January 26th. And primarily they will be focusing on Japanese market, and they'll also be adopting a revenue sharing model. So they'll do their own short drama and post it on the existing platforms such as TikTok. And there'll be like a charging per episode in Japan. Usually can generate 5 to 10 million, yeah, for just one drama. Yeah, but currently in Japan they do have like shortage in supply. So typical Japanese customer, they'll just watch the Chinese drama with a Japanese subtitle. So the photo on the right, yeah, is the advertisement in the like CBD area of Shibuya. Yeah, so it's like Shibuya cross walking. Yeah, you can see the advertisement for 17Live. And the photo of the very right is our like demo streaming session. So we have a like 18 minutes trial, and we actually earned like 230 US dollar. Yeah, for the 18 minutes. Yeah, next slide, please. And for some like other takeaways is like 17Live remain the platform with highest payout ratio and highest ARPPU, and their ARPPU and the payout ratio is actually stable. It doesn't change like since IPO. Yeah, which demonstrate like their core user base is actually very loyal. And more than majority of the spender is like among 30 to 60 years old. Yeah, so they are typically among like the executive like management background and also like some private investors. Yeah, so we do maintain a buy recommendation with a higher target price of $1.45. And the group is currently holding 18 million cash in hand, and this is making up to almost like 60% of the market cap. And they are also paying around 3%. Their dividend yield is also around like 3%. Yeah, the photo on the right is the major event in first half. Yeah, so this is a baseball pitching event, and the top one streamer on TikTok actually was involved. Yeah, his name is Prince Kuya. Yeah, and the photo on the right, on the bottom, is the KFC collaboration activity. Yeah, so that's all for me. Yeah, we can now open to Q&A. Yeah, thank you.
I guess I'll take some question. First, there's one about Gemini Space. I'm not sure which one you're talking about. I guess it's the ChatGPT versus Google Gemini. I'm not sure whether that's the one you're looking for. Yeah, I'll take some of the question. There's one what's my take on Apple lawsuit regarding its AI? Right now Apple has multiple AI related lawsuit. So mainly it's over some is because they're using copyrighted books to train their Apple intelligence. And there's also one they're misleading their investors about the AI process and anti-competitive ties with OpenAI. So I think right now the copyright case poses the biggest near-term reputational risk. But I think Apple is likely just going to defend itself using fair use and settle rather than lose outright. So overall, these suits kind of highlight the growing legal scrutiny of how the tech giant train and market their AI, but it's unlikely to cause any major financial damage for now. It's more like a caution for Apple to be clearer and more transparent about its AI development. So I hope that answers your question. There's another one about shall we expect another tackle from Trump? I guess right now market have increasingly treated Trump's tariff threat as partially a bluff or a negotiation tool rather than really firm commitment. So I would say that yes, there is a pretty high chance that Trump is going to back down or soften at least some part of his latest announcement. Especially if the market or stakeholders push hard. But I guess it's unlikely that he will reverse the entire thing. But some like 100% tariff, extra tariff on Chinese good, it seems a little bit overreach. So we do expect he might back down. Yeah, so I hope that answers your question. I think that's pretty much it from me. I'll pass my time to my colleagues. Thanks.
Thanks, Helena. I'll take some questions, then I have to drop off for another briefing. Yeah, hi Ben, do you see China rare earths having significant impact on US chip stocks? Yeah, talking about that, I I don't see it having a significant impact because for US high-end GPU chips, they still mainly rely on metals, not rare earth. So their cost, I mean their core material to use to produce those GPU chip is still silicon, still copper. As for example, is the rare earths will impact, I think, more on the other industries like defense and magnets. Yeah. Yeah. There's a question about Centurion. Is your target price still around $2 still remains? Any comments on its recent price trend? Yep. Our target price about $2 still remains because our target price is still based on the dividends in specie that they are expected to give out. So they are expected to give out about 7.5% yield of dividend in specie to shareholders by the next AGM. So that's next year. We are still positive on Centurion. Now they have a much stronger balance sheet. Their net debt decreased by about 85%. Now their net debt is only 60 million compared to previously it was close to 500 million. And I think one of the insiders, I think executive chairman Mr. Han, he bought some shares, I think 300K worth of Centurion shares at about, I think 1.4, 1.5 price point. I think that further boosts some shareholder confidence in it. Yeah. And going forward, Centurion will also still hold about 40% stake in the REIT itself. So it will still continue to contribute to their bottom line. Yeah, that's why I'm still positive for Centurion. So question, is Innotech a good fundamental stock to buy? Had news related to Nvidia this morning. Yeah, I think it's yeah, this morning there's some news that it is approved as the recommended vendor for GPU. I mean for Nvidia. Yeah. However, I don't think their results has been performing that well. For example, their first half this year result, their revenue dropped by about 16% and their net profit dropped by 90%. Yeah, so I think they quote that there's slower demand in the GPU space, but of course this news provides some upside to Innotech. But I think as of this point in time, I think it's still hype. I think this for results to come in, I think it'll still take some several quarters. Yeah, so right now it's quite early to say. Yeah. Haven't met their management yet, so if I got the chance, I'll update you all again. Yeah, thanks. There's a question, is GRC a notable construction player in Singapore? They have been receiving many contracts recently. Yeah, I think they are quite significant. I think recently their order book just got boosted by about 500 million from I think residential projects as well as road infrastructure projects. Yeah, so they are quite a notable construction player. Yeah. Should investors avoid Qualcomm due to China antitrust? Yeah, I think for Qualcomm there's quite a lot of headwinds. Because I think a year back Apple said that they wouldn't manufacture chips with Qualcomm. They will move it in-house. So Qualcomm now rely more on Samsung's chips as well as China OEM chips. China pick up about 40%, 40+% of their revenue. So if China antitrust were to put a ban to their sales itself, it will provide quite a big headwind to Qualcomm. Nonetheless, they are trading at quite a discount compared to its peers. I think currently the PE is about 15 times compared to his peers about 30 plus 40 times. So I think unless you're an investor who has very strong conviction and contrarian play, I think currently you should still avoid Qualcomm. Yeah, thanks. Yeah, I think that's all from my end. I'll hand over to my other colleagues. Thanks.
Hi, thank you, Ben. So I got some questions on the Oracle. So the first question on Oracle is that Fahmi, Oracle, your TP is $350. Has this factored in the stake that it may hold in the TikTok deals? So the $350 target price doesn't include any possible deal with TikTok yet. I haven't did that. So because there's still not confirmed agreements, and a lot of details are quite unclear for now. So Oracle currently provides cloud services for the TikTok in the US, but it doesn't own any part of the company, like any equity stake. So there's talk that Oracle might get involved if TikTok is forced to sell its US business, but nothing official so far. A lot of it is from news headline and rumor. So what could change if the deal happen is that Oracle could possibly get a stake or a bigger role in the TikTok. So this could help them to bring more cloud business, help grow Oracle presence in the US market, and boost investors' confidence. So if the deal does go through, and quite meaningful at that for Oracle, it could add upsides to Oracle's earnings and possibly the future earning and the share price in the future. But for now, I think that it's too early to include the target price. So most of the target price, part of it is coming from the larger deals announced in the last quarter in September. So who knows, probably the TikTok deals probably included within these deals, but they haven't really giving out details in the TikTok deals. And probably this week, this Oracle's Cloud World AI, they will probably announce it or not, not sure. But the TP didn't factor in the stake from the TikTok deals. So next question is, any potential upside from the Oracle event this week? The Oracle Cloud World AI is usually focused on the cloud products, AI updates, and customer partnership. But any upside, I think, could be yes. There could be some positive reaction since they announced the surge in backlog to $455 billion in September, but they haven't given out much details on how they are going to do it. So I think the market is anticipating how they are going to deliver such a high backlog, and Oracle will probably lay out the strategy and roadmap because the event is quite long. It's a 3 days event, so a lot of things that they could talk about. So we might see some price up from this if Oracle possibly announce like big customer win or new AI related offerings. And they do would offer talk about new AI offerings, which is the AI database, right? More advanced than their current database. So even if they do announce higher backlog coming from this, because they did say possible higher backlog up to $500 billion in the last quarter, which is possible. So when you think about it, the company probably already have something in mind on how to deliver when they already receive such a high backlog. I think that is it about the Oracle. I'll pass over to my colleagues to answer other questions.
Yeah, I will answer the questions about AppLovin. There are 2 questions, so I'll just combine it. The first one is, hi Serena, what do you make of the SEC probe on AppLovin? And the second one is, AppLovin share price was hit by 16% down with the bad news about investigation. Could you please comment on it? Yeah, thanks for the questions. So for the case, it's still currently under the investigation stage, and to be honest, SEC haven't really charged AppLovin with any wrongdoing at the moment, and SEC is not able to provide any updates at the moment because of US government shutdown. But of course, since this is an ongoing thing, we will be closely follow the development. So I won't say it's zero risk at the moment, but overall, we still believe in AppLovin fundamentals, especially this month that they expanded the e-commerce vertical under referral base, because before they actually did have an e-commerce pilot, and the initiative actually reached a 1 billion gross advertiser spend run rate by December 2024. And that one was with only 600 advertiser. And also at the same time, AppLovin actually released a statement before, and it actually says that their mediation process can actually be audited by the partner. So to ensure that all the data that is equally available to the competing ad network. So this is why at the moment we will still focusing on AppLovin fundamental, but at the same time definitely will we follow the update of the case. I hope this answers your questions. Thanks very much.
Yep, let me take on some. What is the PE for Soonhock? Yeah, so the PE for Soonhock will be based on the 2024 financials, like the trading PE, it will be almost will be 40 plus, but that's because in 2024 there wasn't any major completion or TUP of any of their project or any development project. Yeah, like I mentioned that financials, because they are a developer, and I mean most of their revenue comes from the development segment. They do have a little bit of recurring and stable income, like I mentioned during the presentation earlier. So the PE will be about 40 plus trailing, but forward, yeah, there is estimated there will probably be around five times PE. If you base on the fact that next year they sell out 80-90% of the Stellite companies. Yeah, so that is the answer for that. So I missed the part not recommend to buy. So yeah, So my stance was that if you were a risk adverse investor, yeah, you should not, because there are some risks involved and the profits are lumpy as it is a developer. So usually, from my point of view, if you're more of a risk adverse, you would like those stable recurring income type of shares, perhaps a bank or REIT. Yeah, so that was why I said I didn't recommend, because that is a more of a alpha play if you like. Okay, so there's another question on Soonhock that asks me to repeat the risk. You mentioned not for risk averse, risky sort of IPO. Don't mind reiterating the risk mentioned earlier. Yeah, so the risk, first of all, they are very reliant on external contractors. So if you are relying on external contractors, definitely the quality, like, and the finishing and such a price and all these like financial strength also of the contractors, all these will play a part. So that is a big factor. So as they are developer, obviously they are heavily reliant on all these contractors. So usually they will select these contractors through a bidding process. So yeah, there is many factors involved in that. So that is one of it. Another one also is that because they sell their strata units or for the industrial units. So usually they collect progress payments from the buyers. So like if the purchaser becomes unwilling or unable to make any progress payments or such, so that will also be a factor if the purchaser suddenly becomes a default or any reason or that. So that is a factor. So, and of course demand and supply conditions for industrial space also, like macroeconomic factors, all these will definitely impact the demand for space. Yeah, they're very heavily reliant on the property development projects as well. So that is a factor. So these are some of the risk. And if you're looking at from a gearing perspective, assuming next year they sell 80-90% of Stellite companies, their gearing will likely be around 1.5 times. So they are quite highly geared as well. So that is also another risk that you need to look out for. Yeah. Sorry, Glenn is away. Glenn and Paul are away. So those questions, like sorts that cover like the banking sector. So yeah, if you can join the week after, as next week there won't be a webinar. It's about Deepavali. If it's a burning question, you can type in the P3 and yeah, they'll get to those questions. Yeah, I believe I saw one more question. Let me find it. I can't find it now. Oh yeah, why did REITs fall together with the market despite US bond yields drop on Friday? Yeah, so REITs, they rallied quite significantly over the past 4 months. So I think this is just a little bit of a market reaction type of, and looking at the share price, it didn't really fall that significantly. It's just down like maybe 1% or less on average. So it's just a little fall. But probably with the new risk of tariffs, I guess the market could be considering like inflation risk and such, and possibly potential rate cuts lower. But actually the market is still kind of factoring in another 2 more rate cuts this year. So I don't think that's the reason. But yeah, basically it's just I guess it's just part and parcel of the trading. So not yeah. Yeah, I mean that's just my view. Yeah, thanks. Yeah, let me hand over to the rest of my colleagues. Think there are some other questions before we hand over to Zane for the TA. Yeah, thanks.
All right, get some question on Adobe. 2 questions actually. Any update on Adobe, and is Adobe fundamentals still a buy? Shares have been trending down for quite some time. So let's talk about first why they are trending down. 2 reasons actually, mainly why they are trending down is because their AI monetization and the competitions that they are facing right now. On the AI monetization, I think investors are cautious about how quickly Adobe can turn their AI into revenue, and they expect faster monetization coming from AI, given that Adobe already said many times that the AI would change their business and so on, right? I think so the market is expecting and already priced in faster monetization coming from AI. They would like expect there's certain, you could visibly see material AI revenue coming from AI, but that's not the case. So despite the high, Adobe's AI revenue is actually quite small, and it is contributing less than 1% of the total revenue last year. But recently, the recent quarter, their AI influence product and AI first product revenue, basically revenue for AI, has exceeded their prior target. So that's some positive in that. But when it comes to AI monetization, I think investors are just cautious. Then there's also the competition. There's rising competition from companies like Canva and even Figma that went public recently. But for this, I think although the products are quite similar, like creative products, but Adobe itself focus on the different customers and platform. They already are quite big at that, and they already have large ecosystem. So when you think about it, when customers would like to get new products, for example, so when they already have Adobe, it is more possible for them to just buy additional product from Adobe instead of just changing into new creative software provider like Canva and Figma. And not to mention that we think that Adobe is unlikely to be heavily impacted by the competition, although do some from other platforms like Canva, for example, because these platforms are still quite small and their functions are quite limited at that. I think that their products are mainly more suitable to the casual users and small businesses, but for large enterprises that have been using Adobe for quite some time and already get used to how they work, influencers, and so many functions from Adobe ecosystems make it easier to just transfer files and more advanced use of their creative. It is quite difficult for them. I don't see that them changing their subscriber. Yeah, so even when it comes to competitions, I think Adobe still the leader in creative software. So to answer the questions, Adobe's fundamentals are still a buy. They still have strong margin recurring revenue is so high, 90%, and they hold the dominant position in creative software. And now their AI, their Fireflies have been integrated into their products, but their current focus at the moment would be to increase the tractions. That's what they say, to increase the fraction of the Fireflies instead of monetization of the product first. For example, their Firefly with their AI products have been growing at 30% quarter on quarter, and this Firefly itself has been incorporated in so many different products, Illustrator, Photoshops, and generated billions of assets. So I think that this trending downward in share price largely is because of the sentiment and the valuation. The stock has been weak, mostly due to the sentiment and valuation concern from investors. For us, it's still a buy, So for long-term investors, still a buy, but near-term gains may be limited unless a clear catalyst, for example, like AI revenue, very visible revenue coming from AI. That's what investors expected. Yeah, I think that's all from me when it comes to NLB. Pass over to my colleagues for answering other Q&A or saying.
Yeah, let me just answer a few before handing over to Sin. Yeah, Ikpan also has already left for another meeting, so his questions also if will not be unable to be answered. So if those are burning questions, please feel free to type in the P3. Yeah, there's a question on is capacity preferential offering worth taking to for a good price? Yeah, so we think because it's a pure preferential offering, if you don't take it, definitely you'll be diluted. And the proceeds from this preferential offering will be used for accretive purposes. So it's the accretive DP accretive acquisition in Japan as well as the AEIs in SGPA. So yeah, definitely if you're an existing shareholder, we think you should subscribe for the preferential offering. Yeah, and let's take one last one before handing over to Zain. Between core and prime, yes, which is a better pick. Yeah, so for core and prime, core we don't exactly cover. But prime we cover and we have a target price of 30 cents, so that's about 50% upside. We believe the risk reward play is favorable because first of all, there's income visibility for them. They have signed a lot of leases that are yet to contribute cash, like over 10% of their leases. Will start contributing cash over the next year or so. So that was why that gave them the confidence to increase their dividend payout ratio or distribution payout ratio to 50%. So they are the first US REIT to do that. So Core and Manulife, they are still not paying any dividends. So I think that is just the big sign for, or rather a huge indicator that the US office market is recovering. Yeah, and for property valuations wise, we do expect both core and prime to have some at least stable year valuations, slightly positive, maybe from a little bit of cap rate compression. Yeah, so likely property valuations will hold stable for these US office REITs, except for Manulife, because Manulife we are still facing the gearing issues, and they still have to divest another asset. So likely will be at a discount as well. So that will affect their valuations as well. So yeah, for core and prime, we favor prime because for the fact that they are the first mover, and for increasing the dividend payout ratio, and it is sustainable going forward, at least 50% this year, second half, and 2026 from the visibility of the cash flows that are coming in. Yeah, and also it's like a play that the US office market has really bottomed. So as the dividends start to increase year on year, yeah, we believe the share price recovery will start to come in as well. So now they're trading at about 60% discount to their NAV. Yeah, okay, I'll hand over time to Zain. Zain for the TA. Yeah, thanks.
Okay, thanks, Darren. I'll move on to take the TA questions. Okay, so I think the first question is on CapitaLand Export Trust. So I think for CLAS, I think it's still on a quite a steady uptrend. Recently share price some pullback after hitting a resistance around 95.5 cents this horizontal level. And I think just some pullback in a way together with the market. I think currently the support is likely to be around 91.5 cents to about 93 cents area, which was like this range consolidation back in from second half of September onwards. Yeah, so I think over here price just probably do some sideways consolidation in the meantime. As it's currently on a bit of a pullback. But the weekly wise is still uptrend is still intact. It's just doing a reconnect of the 5 MA on the weekly, and also still about the 10 MA, which is around 91 cents. Yeah, so in the near term, I do see maybe some sideways consolidation. Support to hold at 91.5 cents to about 93 cents, and resistance, I think currently about 94.5 cents to 95.5 cents, about there. The next counter is 3750 Hong Kong, which is CATL. Yeah, for CATL, it has been on a very strong run since the IPO. And then recently we've seen some pullback along with the Hong Kong market as well. So I think at this area currently today, about 520 level, about there, this was a previous swing high resistance in late September. So currently doing a retest, I think probably see some bounce, but my thing is that short-term wise, as previously was on a strong uptrend, right? I think with the current pullback, we probably would see the short-term 5 and 10-day MAs, which is the red line and the blue line, act as a bit of a short-term resistance. Should we do a retest? So some resistance in near term, I think could be above 560 to about 580, this area over here. Yeah, then if let's say the market drops further, I think a strong support might be somewhere. If it does retest this uptrend support line, that will be quite a strong support, somewhere closer to about 480, 490, I think, which is also confirmed with this swing low over here as well. Yeah, as well as I think somewhere closer to the 10 MA of the weekly as well. So yeah, so that's a strong support. That will be a very strong support level if the pullback continues. And so in the near term, I think we probably will see some sideways, I think, but I don't think I think above 560s there should be some resistance, given that overall market is like doing a pullback. And next one is 0778 Hong Kong, which is Fortune REIT. Yeah, so for Fortune REIT, I think there looks to be some weakness in the short term. Price ran up since April, and currently is doing quite a bit of sideways with like a bit of a double top over here around $5.23 about there. And we see some weakness recently as well, where price since the breakdown of this $5.11 level in late September, then it's formed another lower consolidation range over here with the short-term moving averages. The 510 MA is moving below the 20 MA as well. So I think so if it does, I think if we see a breakdown below this 498, then perhaps we might be seeing some further pullbacks closer to the stronger support area around 480 to about 490 area over here, which was also the swing low from end of August. So I think for now, generally, the overall trend is probably in the range over here, sideways for now first. And then I think we might see some slight further pullback. Given the short-term price action is showing some weakness, where price since it broke down below 510. Next one is on Skylink, which was Skylink Gemini Space and Singapore. So two were technical calls I made last week. So first one for Skylink, which is already in progress. So for Skylink, I think the the trend is still intact despite some short-term pullbacks, as a price is still since the breakout of this downwards resistance line, as well as the 5 and 10-day moving averages over here, it could still hold a bullish reversal, since that previously we had a large spike over here, then price pullback on low volume, and then during this period where price came when price broke out, but the volume actually increased over here. So currently during the pullback for the last 3 days, I think the volume has been declining. So hopefully, I think this 33 cents level hopefully can hold as support, which is the 10 MA level. And this 33 cent level, I think, will be key as well, which is also this closing price over here during the breakout. Yeah, so if this can hold as support, then maybe there could be some rebound. Then I think overall in the short term, there might be some sideways trading first, as there's looks like there's some resistance about 38 cents, 36 cents to about 37.5 cents over here first. Yeah, so I think is that if 33 cents can hold as support, then most probably we see some sideways consolidation for the time being, yeah, for Skylink. Then for another one for Gemini Space Station, I think this trade has not been triggered yet. I think because the original idea was that since the IPO price has been trending downwards and then entered into a period of consolidation where price held this $23 level over here. And then some positive developments was that price crossed back above the short-term moving averages 5, as well as the 10-day MAs over here, and then held as support for 3 days over here. So if there was a breakout of this range consolidation, there could be a chance that price could do a reversal to the upside. But currently, I think it's not has not triggered yet, as it has not hit the breakout level. And in the short term wise, I think as of Friday, some weakness as price is below this 24.30 level. So I think in the meantime, most likely we will just continue to see some range consolidation. It could go down, I think, in the short term to test about this $22.60 single level again. Yeah. So I think for this, there's no trigger yet for Gemini Space Station. Looks like still in this range consolidation. And then next one is Singtel. Okay, for Singtel, I think overall in terms of the trend is still uptrend. Recently, some weakness where there was a breakdown of this around $4.28 level, where $4.28 level to retest this around $4.10 a previous resistance. The good thing is that held as support, and afterwards we're seeing some recovery where price is just consolidating sideways with some multiple retests of this around $4.28, $4.30 level with higher lows. So hopefully, if this higher lows can able to form a hole over here, preferably if it can hold this around this 10 MA level around 421. Then subsequently, if there's a breakout of 430 again, I think we might see a resumption of the overall uptrend. In the short term wise, I think most likely just still some sideways expected, unless it can break above 430. Yeah, in terms of the weekly, it needs to break above 430 level as well, which is the 5 and 10 AM is currently around 428. Yeah. So my take will be some sideways, probably maybe between like 420 to 430 right now. Okay, then I'll move on. Next one is SIA. So for SIA, I think it's quite volatile. Last week was looking better with where he managed to hold this 655 level over here, and then there was some upside to break above 630, 663. However, I think today there's back a gap down back. So I think this level will be quite important, around 655 over here, which is also the 20 MA level, and then this horizontal level. So this level must hold, and price must do a rebound over here to try to retest back 665 around this level again. If price breaks below this we'll assume the lows of today, then we might see price weakness back towards 648 again, back to the lower support level. On the weekly, this is also quite important. Currently, 655, also around that 5 and 10 MAs on the weekly as well. So with a breakout last week, this level must be able to hold for some continued upside. If not, we might see a reversion back down. So I think for now, yeah, for now maybe if assuming 655 holds as support, I would assume most likely we'll do a range consolidation between this level to about 665 this week. Next one for Frank, I think there's some bit of a weakness. So price last week was holding sideways above like 151. Today with a gap down below to test about 145, 146 about there. Yeah, then in terms of the weekly MAs, 145 to 147, so holding as a bit. This level is important. Price must recover back above to show some strength. I think we might possibly see some weakness to test maybe 141, the 20 MA on the weekly. Yeah, so I think for now, if this price cannot hold 146, then we might see some down. We might possibly see some weakness to test the strong support gain close to 140 for Frank. Overall, it's still in the range. Yeah. Then next one for the Lion OCBC Hang Seng Tech HST. Yeah, so there was a bit of some weakness actually on Friday already when previously when price broke above this double top around $1.03. Then ideal case that where it has strength would be to maintain the short-term movement ranges over here. Then on Friday we saw some weakness where there was closing below this 103 level and on increasing volume recently as well. So today with a gap down, I think we might continue to see possibly the retest of the this support line over here. So let me zoom out a bit. So I think this upward support line over here will be the near-term support. So that if it does retest this level, maybe somewhere around 95 to 96 cents over here, then yeah, this will be somewhere closer to the previous somewhere close to the horizontal breakout level over here recently, which was also like a period of range consolidation back in March this year. So I think for HST, maybe some slight further pullback. If it does retest this level, then perhaps you'll see some bounce coming in. And next one for WeHer, I think price is doing possibly some weakness as last week. I think there's been looks like in the short term wise, it looks like a potential double top where we tested the resistance again at 78.5 cents, and then where previously it broke out this range between around 71.5 cents to 74.5 cents. Friday there was a closing below that, and today there's a gap down. Then overall, price could be starting to trade out this short-term uptrend channel over here as well. So I think it might see some weakness to try to where price might actually retest again this 71 cents around this swing low level again. Yeah, then on the weekly itself, if price cannot try to regain this foothold on the 73 cents level and try to go back over 75 cents, then we might possibly see some weakness. Where on the weekly, there was previously a retracement back to the 10 MA, there was a bounce back. But last week closed with a bit of a shooting star, and today, if it goes below the 5 and 10 MA on the weekly, confirming the uptrend channel breakdown, we might possibly see some weakness to the down, a bit slightly to the downside. And so I think near term wise, maybe we might go and test close to 70 cents, 71 cents, then maybe just move sideways afterwards. The next one, Thai Bev. Okay, for Thai Bev, recently I think it's picking up a little bit, but I wouldn't expect too much for this counter. For this, it was in this range between 45.5 cents to 47.5 cents. And there was a break above this resistance on 3rd October on a bit of high volume. Good thing is that it maintained this level, and it maintained this level, and assuming it does, I think possibly we might see go a little bit higher to test the 49.5 cents to 50 cents area, which is a previous horizontal support as well as this horizontal support breakdown level. So I think this will be the next resistance. Then above that, 51.5 cents will be the next resistance level. So I think for Thai baht, maybe assuming it holds 47.5 cents, it might be range trading between 47.5 cents to 49.5 cents in the short term. The next one is for ISDN. So for ISDN, I think there's some weakness in terms of the upwards momentum in the short term, as price is where price consolidated sideways at this swing high resistance around 45.5 cents, and then currently is showing some weakness where we see some lower highs along the way, and then as well as this level at 40.5 cents, which was holding a support multiple times. Today with a gap down below that level, along with lower highs previously already. So that shows some weakness, and I think we could possibly see some pullbacks to retest around 39 cents hit today already. So maybe 38 to 39, you might back test this 38 to 39 cents area. It was trading in from mid-August to the start of September this year. So some slight weakness for ISD in the meantime. In terms of the weekly, you can see that previously when price showed strength during a period from mid-July, the price was holding very well along the short-term moving averages, 5 and 10 MAs. And today, there's a breakdown below that. So starting to see some weakness coming where price might retest on the lower support levels. And for Marco Polo Marine, I think it's still quite strong. Overall, the uptrend channel is still holding. We tested, I think 0.090 was a previous horizontal resistance quite long ago. And overall it's still quite strong because it's still holding the 5 MAs this today, 0.086, which held as a bit of support. So perhaps maybe some sideways consolidation or continuation uptrend. So I think for Marco Polo Marine, the uptrend is still in overall midterm uptrend is still intact as long as it holds the 10 MA level, at least for the time being, which is currently 0.082. Since it's still on a quite steady uptrend movement over in the channel. Also, I think one of the stronger stocks today with still a bit of a green or flat. So on ES3. ES3 is the ETF that tracks the benchmark. So for ES3, I think today overall we're seeing some pullbacks, but it's retesting this around 4.42 level, which was this period of resistance previously. So overall, I think at this level, you might see some support coming around this. First level of support will be around this level 4.42, where we test this previous resistance. Then the next level of support will be somewhere close to 4.36, around there. And so you might see some rebound in the short term. Then I think we might see some rebound after today. Then some short-term resistance might come in around 4.48 above where this was a gap on Friday. Then I think STM may be some sideways consolidation for the time being. Next one is CLR, which is the Lion Phillip S3 ETF. So for the S3 ETF, it has been on a very steady uptrend since the breakout of this range consolidation, 79 cents in middle of July. Then currently it's hanging around sideways around the previous swing high of this was 86 cents formed in late September last year. So I think overall for now, short-term wise, I'm expecting sideways consolidation as last week price did a retest of this 87 cents area, then we're seeing some pullback. So I would think looks like a range consolidation in the short term. Then support is probably around 85 cents about there. The next questions on our tech. Yeah, so for our tech, I think in the short term wise, there's some pullback taking place where currently it looks like there's a possible downwards resistance line acting on it. In terms of the weekly price has also recently broke down a few consecutive weeks below the short-term 5 and 10 MA levels, where previously it was trending along since April this year. Yeah, so that adds to the fact there's some weakness recently. In terms of the weekly, next one, MA wise is the 20 MA on the weekly 86 cents, as that could possibly be a support. For now, I think in terms of the daily levels, a small bounce on 95 cents, this swing low level last week, then but still facing resistance along the 5 and 10 MA levels. So I think overall it, still weakness and currently retesting 92 cents this previous range resistance level. So possibly some bounce, but I think will be quite small. Yeah. Maybe for now, I would think maybe 95 cents, that area might be some short-term resistance. Then price might do some further pullbacks to test maybe 88 cents next. It's the next level of support here. Yeah, I think this for now still some weakness unless price can try to trade out downwards resistance line as well as some of the short-term moving averages like the 10 MA that has been holding as a bit of resistance during this pullback. The next question is on TeleChoice. So for TeleChoice, I think in terms of TA, I can't really give a good analysis as this counter is actually quite illiquid. And the trading volume is actually quite low as well, which is maybe 100K on average or less. Yeah, but overall in terms of the trend wise, I would say looks like a range consolidation right now. The key resistance as of now 70.5 cents. And then the next level of resistance, I think will be around 90.5 cents over here, where previously there was some high volume that occurred in mid-June this year. Then there was also another higher volume day which hit 90.5 cents in 1st August this year as well. So in the currently I think it's holding as a range around maybe 16 cents to 70.5 cents. Yeah, so for the share price to actually show some strength, I think we need to see a break above this current range is trading in 70.5 cents, and perhaps it can recover towards 19.5 cents subsequently. Okay, next one for LHN, showing some weakness recently as well, with this price with a possible downward resistance line, and then retesting this 91 cents previous swing high resistance that acted as a turn to support and a bit of a lower high bounce over here to hit about 99 cents this area where price broke down from. So I think for now, today is a second retest of this swing low. Then I think there might be another bounce again, but I would expect a lower high bounce for now. Perhaps resistance somewhere around 93 cents to 94 cents this area, where this was also a breakdown area recently. And currently the 10 MA level over here as well. So maybe some bounce from this level, then it could move lower again if it continues the current pullback trend. Next question on OKP Holdings. So OKP Holdings overall is in an uptrend. Then I think currently it's doing some sideways. a bit of sideways consolidation. In the short term, there's some weakness as previously price was broke out of this range consolidation largely between 95 cents to about $1.08 in the start of September. Then price did some consolidation thereafter, but we see some multiple retests of the support again with low highs on the way. So there's pure weakness starting to came in over here since October, and I think with a breakdown of this 108 level again. So I think in the short term wise, we most likely could see some further pullback to test about closer, maybe I think close to the $1 mark, the psychological level, as well as this will mark a retest of this main trend line, upward support line that has been holding the price since February this year. Yeah, so I think short-term pullback, maybe $1 here could hold as a bit of support for a bounce. Then current resistance like 106 to about 110 area. Yeah, then maybe just moving sideways. Okay, next question on KSH holdings. Moving sideways for now. I think for this, I think need to see a break of the good thing is that the second retest of this 33.5 cents support level over here has held, and price has managed to hold a bit of a higher low at this 36.5 cents level over here. And multiple retests of this swing high resistance, 38.5 cents, I would think is a good sign. So multiple tests of resistance, I think if afterwards if price attempts to break out of this resistance again, then perhaps you could see some recovery in terms of the share price to head back to some of the previous levels and around 40.5 cents to 42.5 cents area. Yeah, so for now, still range consolidation, but hopefully if you can hold 36.5 cents and subsequently break above this 38.5 cents, then we might see a recovery, given that it's tested the resistance again multiple times. Next one for yen lot. Yen lot, some weakness coming in recently. So previously was trending quite well, and recently we have some multiple retests of this higher range consolidation resistance at 73 cents, and price was unable to try to recover above this 76.5 cents level, and afterwards another retest of this swing low level again. So multiple tests of support isn't a good sign, and today it's moving down slightly again. So I would think maybe some short term, in terms of the short terms, perhaps some further pullback to test this 69.5 cents level perhaps, where previously this was horizontal support level during this period of range consolidation ends August to September. Yeah, then the next support level I think would be maybe 67.5 cents. Then I think then afterwards another key support could possibly take reference from this trend line over here. This our support line that's been holding price since April. So yeah, some near-term supports will be these levels I mentioned. I think short-term wise, you could possibly see a continuation of this weakness to try to retest these supports, given the weakness in the recent price action. Okay, next question, Sembcorp Industries. Okay, for Sembcorp Industry, I think the good thing is still looking okay for now. I think the good thing is that finally you managed to break out this range consolidation 603 to 618, and hopefully can today is holding the 10 MA level at support 626 about that. So if this holds, then we might see some possible rebound back to try to retest 650, 655, this swing high area again. I think short term wise, it might continue to do some range bound sideways consolidation, but overall you can maintain our 618. I think that's still quite good already. Then on the weekly, also looking better, where currently we are seeing price as of now as of now, 2 weekly candles above the 5 and 10 MA on the short-term MAs. Yeah, so this level also around 618 about there. So if you can maintain, I think that would be good for possible rebound. Overall, closer to 660, there might be a bit of a stronger resistance, where it's the 20 MA on the weekly, and then I think there was a previous horizontal level as well, 666. So that will be a bit of a resistance short in the near term. Next one is UOB KHN. So for UOB KHN, I think since the like this double top over here, $2.63, where price was only able to hold breakout for a few days, and then subsequently we've seen some weakness back. Today, I think it's still showing weakness as during this a rebound from this area of support, like 240 over here, a bit of a lower high, and then at 253 this level, 252, 253 over here met some resistance and currently pulling back again. So I would think price will probably go back to retest this area of support again, around 235 to 240 area, then perhaps do a small bounce again. Then afterwards, maybe resistance at 245, 246 about there. Yeah, so still some short. In terms of the short-term wise, since starting of September, there's been some weakness coming in. Yeah, and I expect that to continue for now. Yeah, given that the price action has not shown any strength yet. Next one is on sets. Yeah, so for sets, I think overall uptrend is still quite steady. Then last week was moving sideways at 352 previously this level, which was this head and shoulders breakdown level over here. Then today gap down. Okay, but I would think that as long as it can hold 336, that will be still okay. Because 336 was this level that price was consolidating in this ascending triangle for a long period of time. And as long as this can hold into support, then I think overall uptrend is still intact. Yeah, for now, I think most probably some range bound movements where resistance maybe in the short term would maybe around somewhere closer to 350. Yeah, then support would be like 336 would be a very strong support. Next one is SI Engineering. Yeah, so for SI Engineering, in terms of current price action, it looks pretty sideways. I think it may have met some resistance from this trend line over here. In the short term wise, I think it will move quite sideways, as there's currently some support 343, which we tested today from this swing low start of October. And then below that, there's also around 335, a previous swing high resistance. So I would think pretty sideways movement. And in the short term wise, I think some resistance might come around 355 level. And I think overall just a bit of sideways consolidation for SI Engineering in the short term. Okay, next question on Centurion. Centurion, I think, is still showing some weakness as price overall is still holding this, at least the 10 MA as the resistance. Then I think today, for now, I think it might go to retest this swing lows support, right? 143 to 144, this area. Okay, today to be tested 144 already. So I think over here, it might hold as a support for now, but I will expect some slight bounce to hold, some slight bounce from this retest and maybe resistance or hold at 150, which is currently the 10 MA level over here. So I think still looking, there's still some weakness for now for Centurion. Yeah, then assuming if the pullback still continues, I think it will be quite close to the 200 MA level, this purple line. I think this will be quite very strong support if it does test, which it has not tested since I think February last year, if I'm not wrong. Yeah, so that's for Centurion. Still some weakness in the short term, maybe some sideways. Yeah, until you can try to overcome this 10 MA in the short term on the daily. Yeah, I think I'll try to take maybe 3 more questions as we are close to 1. So first one, Netlink. For Netlink, I think it's still on a steady uptrend over here, and yeah, looks like perhaps a bit of a range consolidation, right? Between like 93 cents to about 96.5 cents area. So last Friday marked a retest of this area. I think yeah, could be just moving still range bound for now. And next one is Manulife US REIT. Yeah, for Manulife US REIT, I think for now it looks pretty sideways, I think. Yeah, since the breakdown of this 0.079 level, price has been holding a bit below that, and it looks pretty sideways for now. I think if it does and currently holding support like around 0.075 level over here, but it's been testing this support multiple times. So I think there's still some weakness, and I think it could go a bit lower to test 0.072, which is this previous horizontal resistance. Then maybe some rebound from there and continue sideways. Okay, then I'll take one last question on the international cement. For international cement, I think short-term wise, there's some decline in terms of the momentum where previously, okay, this one is also a small cap. So for this, previously was maintaining this trendline support along the way, and then you see the MAs holding a support, but there was a bit of a reversal over here where there was forced breakout 0.048 level, and then afterwards price the 5 and 10 MA levels are currently trending below the 20 MA as well, and short term wise there could be this downwards resistance line, price need to break out. So for now I think it could be some weakness for now, still most probably range trading. Then in terms of weekly MA, maybe it could retest the 10 MA, which is currently for 0.04 on the weekly, then maybe you see a bounce from that level again. Yeah, but for now, nothing much, unless you can try to break above 0.046, then the next level will be 0.048. So I think pretty sideways for now. Yeah, I think that's all for the TA. I think I'll hand over time back to my colleagues if there are any more questions or comments. Yeah, thanks. So I'm unable to take all the TA questions if you have time, but feel free to post inside our P3 community.